Hey, everybody, Russell Gray, co-host of the Real Estate Guys radio show. And we're going to be doing a session here with Dana Samuelson. Hey, Dana.
Hi, Russ. Good to see you.
Dana is from American Gold Exchange. He is our precious metals guru, our contributor for all things precious metals. And we did the Silver Series together. And so what we found out in doing the Silver Series, and if you haven't seen that, by the way, you can send an email to silverseries@realestateguysradio.com. And I think that we'll put all the links to it in the notes below. We never know how people find these videos. But we're here in early April, and we get a lot of questions. And so we said, well, just every once in a while, we're going to collect a pile of questions and we're going to get together and record the answers. So this is kind of like Ask the Guys that Robert and I do, but it's more like Ask the Expert. So I'll be your host, and Dana will be helping us out with this. So Dana, just a really like 15-second, 30-second, bio on who you are and why you're qualified to have an opinion.
Well,
Can you do it that fast?
Yeah, I can do it. I've been in the precious metals markets for 40 years. It's my entire adult career. I founded American Gold Exchange 22 years ago after working for some of the best people in the industry. Had the courage to hang up my own shingle, and I've literally watched the prices of gold and silver trade almost all day, every day for the last 20 plus years, and have had a big hand in the physical precious metals market for this entire time. I have a vested interest. So I pay very close attention to what makes these markets move.
And he's a super nice guy and a straight shooter. So like that too. So he's a regular contributor to the show. He comes on our investor summit, has been many times, will come again. Been attending the New Orleans Investment Conference longer than Robert and I have, goes way back with Brian London. The two of them worked together under Jim Blanchard way back in the day. And if you don't know Jim Blanchard, the late, great Jim Blanchard, the reason you can own precious metals is because Jim Blanchard basically stood up to President Gerald Ford and challenged him to either arrest him or decriminalize the private ownership of gold. Ford did the latter, and today we can insulate ourselves from the overprinting of dollars and preserve our wealth, and that's why we care about precious metals. So with that said, let's just dive in. So our first question here is from a gentleman named Rich in Columbia, Illinois, and he says, I got two questions. There's been rumors lately the Perth Mint is running short on metals, particularly silver, and may not be able to satisfy committed orders. Any insight into this rumor, and more importantly, if it's true, what does that mean for the price of silver? That's the first half. The second question is, in watching the markets, it seems to be a regular occurrence. The price of gold is pushed down when American markets open. Oh, that opens a can of worms. Then run back up when Asian markets open. Is this purely a cultural thing where gold is more desirable, or are there other factors at play to press the price down in the West? And I may have a little bit to say on that, but Dana, what say you?
Well, with regard to the Perth Mint, you can buy precious metals unfabricated from the Perth Mint and then call in on demand, what you want to have made for your account. And people are finding that in this COVID era of production, they're not able to get the products that they want from the Perth Mint in a timely manner or in any manner at all. And that's because the Perth Mint, like all the other fabricating facilities, whether it's a sovereign mint or private refinery, are hampered by COVID for what they can produce because these are tightly packed places and you can't socially distance properly. Plus, we have had a legitimately more demand than there is supply of precious metals in the short term, and that is a bottleneck through these fabricating plants. So the Perth Mint isn't making kilogram silver bars. They're not making 100-ounce bars. What they're making are the 1-ounce coins that they actually have the highest profit margin on.
Kangaroos.
Kangaroos that are most in demand for the most part. So people not being able to get their contracts lived up to in the short term is creating some consternation, but it's not really because there's not enough metal. It's just that there's not enough capacity to produce it fast enough right now in all the forms that we would like to have it.
Yeah, since we're talking to real estate investors, it's like, is the problem there aren't enough trees in the forest, or is the problem the lumber mill isn't turning them into 2x4s fast enough? Or is there some problem in the supply chain getting them from the mill to the Home Depot where you're going to pick them up and go do your project, right? And so sometimes you can read into a, what you see at the tail end of the pipeline and not understand where the clog is. That's why having somebody like Dana to talk to helps a lot. And by the way, I don't know that we made it clear. We kind of mentioned it, but the Perth Mint is like the official metal minter of the Australian government, I believe. It's private, but they work hand in hand. I think that's the way it works. Yeah.
Yes.
Okay. Okay, so that's what the Perth Mint is. So good question and great answer, Dana. Thank you. So the second half has to do with the price of gold changing depending on which market is open. And I know that you're busy there right on Sunday afternoons waiting for that market to open, because I've been on the phone with you during those times trying to squeeze something in before the market changes.
Right.
And so what's happening there?
Well, the futures markets are where we trade contracts for delivery, or just to speculate, or to hedge inventory. So I hedge my inventory in the futures market. If I buy 1,000 ounces of silver or 5,000 ounces into the inventory of the company, I sell 5,000 ounces on paper, so it balances out. But you can speculate in the futures markets for 10% of the value of the contract. So there's a lot of leverage there. And there was something I learned at the New Orleans Investment Conference in the 90s. There was a study done on the London AM and PM fix. And in 9 out of 10 days, the PM fix was higher than the AM fix, if I've got it right. I might have it backwards, but literally you could buy in the morning on the AM fix and sell in the evening and make a little money almost 9 out of 10 times.
That's basically futures trading on a daily basis. And the concept is arbitrage, buy and sell the same instrument at two different prices and make money on the spread. And that's the game that gets played all the time in the precious metals markets.
Right. Now, with regard to this particular question, I do see a lot of pressure in the precious metals markets early in the morning in the US market when they first open. And I attribute that to, especially when markets are weak, like we've gone through a correction, we get ETFs selling when the market opens for all the orders from yesterday. So that tends to put an abnormal amount of pressure into the market right at the very beginning of the trading day here in the US. And I have seen over the last 10 years a trend where the Asian markets are more and more dominant over the actual price of the metal than the US market has been for the last 30 years before that. So from the 80s all the way into the early 2000s, mid 2000s, 2010, the US market tended to dominate the precious metals pricing. Now we're seeing a shift where the Asian markets are more impactful than they've ever been. And I expect that trend to continue. But yeah, weaker in the morning, especially in a down correcting market like we've seen since August, is not unusual. So you can buy the dip in the morning and sell it in the afternoon usually. And that's exactly what happened today. So this is it's not something you can bank on, but it is a trend that we are seeing.
So a couple different resources there for you, Rich, and anybody that's interested. There is an organization called the Gold Antitrust Association, and they spend a lot of time just studying what's going on and have made very serious and I'd say credible allegations of manipulation in the market. Chris Powell and Bill Murphy over there. And so GATA, GATA.org is a place you can go. They're always at the New Orleans Investment Conference. They always present, and they're always worth listening to. Now, I know other people who say there's absolutely no evidence, and the guy's kind of an outlier. I won't confuse you, but if you want to kind of get somebody who is fact-based, who talks about what's going on here, GATA can be a very good source. And the other thing too, talking about the shift of power from west to east.
Yeah.
I covered that way back in the Future of Money and Wealth in that presentation I did, The Dollar Under Attack, as I chronicled how China took a look at what the United States did to become the world's hegemonic financial power, and they've basically just been implementing it. One of the things they did, in addition to the Asian Infrastructure Bank, which is their version of the IMF, and making loans and developing a deep bond market. Everybody criticizes China. Oh my God, they went into $40 trillion of debt after 2008. But what they built was a giant bond market, which is what you have to have if you want to be a major player. So, if you look at what what I think they were doing. They've been buying up resources everywhere, mines everywhere. But one of the things they did was they opened up the Shanghai Gold Exchange
Right.
to try to take over the role in the East of what the West was doing with the LBMA and all of that. So, yeah, and of course, the East is much bigger buyers of physical gold, and
Right.
it behooves them to have a market that is probably priced a little bit more honestly based on physical. And at some point, there could be a break between the two. At least that's, again, I'm the amateur here, but I spent a lot of time studying this because if you're going to store wealth in anything, whether it's real estate or precious metals or anything real, you got to study it and kind of understand what affects it. And that's why I like doing these things with you, because Dana, every time we get together. So any closing comments on that part of it? I don't want to have the last word because I'm not the expert.
Well, the Asian markets are becoming more and more dominant in the precious metals pricing cycle because that's where most of the inherent demand is. And I do see a time when the physical market will once again dominate the actual spot pricing, which the futures markets took over, in the late 80s, early 90s. Prior to that, it was the physical market that dominated the futures markets. Now with so much money created through computer trading and algorithms, and it's gone off the scale, the futures market dominates the physical market. We're heading back towards the inversion, back towards the physical, and it will be led in the Eastern markets, I believe, but not for a little while yet. We still have a little ways to go.
Yeah, my theory on that is that back then, the dollar was as good as gold until Nixon took us off it in 1971.
Right?
And then after that, nobody wanted the dollar, they wanted gold. And so the physical price dominated.
Right.
Then Volcker raised the rates up to 20-something%, basically saved the dollar. It was a great reset of its time, if you will. And the dollar became popular. And today people are perfectly happy to trade anything, Bitcoin, tulips. They don't care. They'll trade anything as long as they go from cash, dollars, to asset, whatever it is they bought, back to cash. And they want to finish the round trip in cash. In other words, as long as the dollar is in demand, paper contracts will rule because people can churn them to create dollars. But if
Right.
we get back to a point where people don't want dollars and they want something physical, and that's where we're at in the East,
Right.
going to start to see more pressure to flip it back over on the physical. So that's kind of the why underneath the what, my opinion. And again, it's just my opinion. Okay, so let's do the next question. And if I can figure out how to get there. Next question is from Brandon in Louisville, Kentucky. He says, what are your thoughts on the validity of small mining firms like Brazil Minerals or Lithium Chile, who continue to buy mining rights and acreage, but have not started to mine or produce or locate actual metals yet? Now, I got that and I said, I don't have any thoughts on that because I am wholly not qualified to have any, but I know a guy. And then I called you, Dana, and I asked you, and what did you say?
I said, that's a little above my pay grade because I'm a humble physical precious metals trader and I'm not the mining stock expert, but we know of another guy.
But we know a guy. So the great Brian London, who puts out the Gold Newsletter, who's been a staple now on our Investor Summit and puts on his own excellent conference every fall, the New Orleans Investment Conference, is expert on this. So we invited him to be a part of today's session. He couldn't make it. So we're going to hold this question, Brandon. And if you do have questions about mining and resources and stuff like that, that isn't actually physical precious metals, we're happy to answer your questions, but Dana and I both aren't qualified to do it. So we'll call Dana. And so feel free to keep those questions coming, Brandon. Sorry we didn't have the answer for you today, but we'll get it for you. Okay. So look forward to another edition of this with Brian. The next question is from Michael in Kingston Springs, Tennessee. He says, where do you see the price of gold and other precious metals? So you can start dusting off your crystal ball right now, Dana. Where do you see the price of gold and other precious metals if the Fed were to continue with QE indefinitely and cause inflation? And number two, raises rates to combat inflation. Or number three, cease QE, which means stop printing money and not raise rates. So three different scenarios. And he's trying to figure out what's going to go on with the price of gold in dollars, which is a whole
Right.
different paradigm shift because I don't
Right.
even look at it that way. But let's just assume that you're looking at gold and you denominate it in dollars instead of vice versa. What do you think happens? So the Fed is obviously the centerpiece of everything that goes on because they
Right.
control the price of money, the volume of money, the value of money. Their policies matter everywhere. One of the first places you often see it in addition to the stock and bond market, is the precious metals market. So what do you think? If the Fed continues with QE indefinitely and causes inflation, what happens to the price of precious metals?
Well, we already know what will happen because we saw it between 2009 and 2011. Every time another round of QE was announced, gold went higher. So gold likes it when there's more money being printed. So if the Fed continues to print more money, which they're going to do, gold will continue to rise. It's not always a straight line, as we're learning this year, but it will continue to gain value relative to the currency it's printed against, especially if inflation really starts to kick in. That is a big driver for precious metals. And we saw that in the 70s in spades when gold went from 40 bucks an ounce to 850 over a 10-year period, especially in the late 70s when gold went from 100 to 800 between 1975 and 1980, primarily driven on the back of very high inflation, 15, 16, 17, 18% inflation.
Yeah. And the thing is, you're already seeing it. Price of lumber, price of energy, price of rents, price of food, right. Price of lumber. Did I mention that? Price of real estate. Yep. I mean, everything. So that is inflation. And they can change the way they calculate CPI for whatever reason. But at the end of the day, in the street where inflation really matters, especially for real estate investors, because your tenants feel it. When the price of gas goes up 50 cents a gallon, when it costs more money to feed their family, all of a sudden it's harder for them to absorb rent increases. It's harder for them to move up. And the pressure is in affordable markets, affordable niches. And we've been proponents of that as a strategic real estate investor, focus on affordability, because even though the numbers seem higher and people might be making more money in terms of purchasing power for the U.S. consumer has been a losing proposition for decades. They haven't gained anything. And so you have to be in debt. You have to own precious metals. You have to own real estate. You have to use cash flow and tax breaks to cover that. And you need to not be at the top of the market. So inflation is definitely baked into the cake. It's an overt objective of the Fed stated right on their website. So it's not a matter of if, it's only a matter of when and how much and how fast and what position you're in when it happens. So great question, part one. Part two, what if the Fed raises rates to combat inflation?
Well, we saw that in the late 70s when Paul Volcker raised interest rates dramatically to fight inflation. And that broke the back of the precious metals market.
And a lot of other things.
Well, yeah, there was a lot of collateral damage in the process. And so the Fed's kind of caught between a rock and a hard place. They can't raise rates too high because they'll break the stock market. They'll also... And
that's only the second worst thing.
Right. There's another aspect of it is our debt is so large now as a percentage of gross domestic product, GDP, and we have so much debt that if the Fed raises rates too high, the debt load that the U.S. will pay will be greater, be the largest item on the annual budget, greater than our military spending. Now think about that.
Yeah, which is only the fourth worst thing.
Right. So
that's a cash flow problem, but they can print cash.
1 and 3 are. So maybe you can help me a little bit with that. But if the Fed raises rates in the short term, it'll pressure metals lower. But the result of what they do will probably ultimately help to push metals higher in the long run once that phase is passed.
Yes.
Through that part.
So the second worst thing would be they raise rates and it collapses the bond market.
Right.
Because those things are all hypothecated. We talked about this all the time on the show. We mentioned it in the video we made right before this, our boots on the ground update for precious metals for April of 2021. So you can check that out if you'd like. But you have to understand interest rates are like cap rates. And you can understand if you're a property owner and your cap rate is going up and your income isn't, it means that the value of the property is going down. And if you have a loan on it, it's eroding your equity to the point where you could be upside down. Now, that's a little bit of a problem for a real estate investor, but for a hypothecated bondholder, it's a big problem because they get a cash call and they get a margin call. And what ends up happening is balance sheets start to implode. That's what happened in 2008. That's what triggered the 2008 financial crisis, was bonds going bad. So, and then of course, the worst thing that happens is that the dollar breaks trying to fix all this, which I think is the probable outcome, which is why I'm so adamant about people having some insurance against that, which is what this is all about. So there's a lot of bad things that can happen. And Paul Volcker himself said The Fed can't play that raise the interest rate card this time because we're in a very different world. We're not a manufacturing economy. We're a debt-driven consumer economy. We have way too much systemic debt everywhere in the world, but especially in the US. So it's really not an option. I mean, they might try it, but they tried it once a little bit, like 2016, and they immediately had to retreat because, to your point, Dana, it took out the stock market. If they would have kept going, it would have taken out a whole lot more. So Peter calls them being in a monetary roach motel. You say they're between a rock and a hard place. That's probably, if rates start to go up and the Fed is unable to control it, then that means they've lost the currency.
Right, right. And that's a recipe that's ripe for higher inflation.
Yeah, then you're absolutely positively going to want to have debt on real assets so that and then you want to own precious metals. And as those precious metals reflect in dollar value, the inflation, you can convert those precious metals into the currency, retire the debt, and own the income producing real estate, basically free and clear. And that's a whole different strategy. So, okay. So number 3, cease QE. So they quit printing, but they don't raise rates. Then what?
Well, if they cease QE at this point in time, that's going to bring the economy back to where its mean average is, which is weak. You know, when you have debt to GDP at over 100% ratio for 5 years or longer, in 9 studies over the last 100 years, economies don't grow at more than about 2.5% a year. It's impossible to. So and that's where we were prior to between 2014 and 2018. So that's what that means. We're going to have a slower, weaker economy, which is not going to be good for the dollar, and that will help to buoy precious metals, but not as fast. But it's not going to be good for the U.S. economy because we need that stimulus to prop it up.
Yeah. So Dana, let me take a shot at this, and you tell me what you think, and I could be dead wrong. I think the reason they do QE is to purchase bonds and to suppress rates. If they stop doing QE, there's no such thing as not raise rates. They raise rates specifically by intervening in the bond market and printing money to bid on bonds.
Right.
If they stop bidding on bonds, which is ceasing QE, because that's what QE is. They print money and buy bonds. If they stop doing that, then bond prices will fall, rates will rise. There is no such thing as stop QE and not raise rates.
Right. Am I correct in assuming the Fed is the biggest buyer of bonds in the world right now, and that we're seeing our foreign counterparts buying fewer and fewer bonds every year now?
Yeah, Russia, China, they're divesting. Russia's almost completely out.
Right.
Even Japan, currently periodically does a little bit of a purge, and they've been the biggest holder of bonds. And of course, they have their own issues over there. I mean, they monetize 100% of their bond issuance, and they're 250%
Right.
of GDP in their debt. So it can go on for a very, very long time. But the issue is like with a lot of things, the U.S. is kind of the last stop, because you can say, oh yeah, but Japan lasted all that time. Japan wasn't the world's reserve currency. Japan wasn't the United States. So what worked in other places or doesn't work in other places, the United States is its own animal. And I think people have to understand that. And I think they understand it so well that they think we're invincible. And that's another mistake, because so again, we're not saying everything's going to fall apart. We're saying that it's fragile. And these guys have a tiger by the tail trying to manage all of this. And you can just, sit on the sideline and hope they figure it out. Or you can organize your portfolio so that if they lose control, it doesn't damage you as badly. Or in fact, in some cases, you can actually profit from it. So don't feel like, oh my God, the sky is falling. It's not that way at all. There's a ton of opportunity here. And I'm kind of getting, Dana knows how I am, right? I'm super excited about it, because when you take real estate, debt, and gold and combine them correctly, you have a really powerful mixture to profit in real terms, in terms of what's going on in the world right now. And to your point earlier, Dana, the Fed is painted into a corner. I don't see too many other outcomes. I mean, I continue to talk with you guys, hang out with Peter, Brian, all these people, because I want to understand. I don't want to get blindsided like I did in 2008. And, there's just a lot going on. It's a lot to watch, but I try to keep it really simple structurally so that I can just understand what the moves mean. And bottom line is that the Fed is printing dollars to purchase bonds to drive rates down, and they have to, which puts all the pressure on the currency, which is why you want to be in debt, own real estate, and own precious metals, in my opinion. Only my opinion. Okay, let's move on to the next question. This is from Matthew in Seattle, Washington. I'm interested in buying and storing some gold in Switzerland and Singapore. Do you have any recommendations for reputable sellers? So to do that, so before you give the recommendations, because I know you do, and that you don't have to give them here if you don't want to, they can just contact you and you can provide that information. I'll let you make a decision on that. But why would somebody consider doing that?
Well, they want to hold their wealth outside of the country and they want to hold it in precious metals, which makes all the sense in the world. If you want to have some protection and an escape hatch for yourself. So having gold and silver either in Europe or Asia is not a bad thing to do. You know, when gold was made illegal to own in the United States by FDR in 1933, we called the gold in. It was currency at the time and money, of course. So they called the gold out of the currency, but it was never illegal to own in Europe. So, you know, you could go to Europe and trade, buy gold, you actually buy old US coins all the way till the 70s when it was re-legalized here. Now, I don't think private ownership of gold will be disallowed again in the United States because it's not in the currency anymore. And the percentage of people that own it is relatively small relative to the overall size of the country. But it doesn't mean you don't want to have a little money somewhere else. And gold and silver are the most liquid forms of currency. Now, I don't know individual precious metals dealers either in Singapore or Switzerland, but I do know of a couple of storage facilities that you can use in those places, buy the metal here and have it sent to Singapore or Switzerland for you. But it's really not appropriate if you want to buy 10 or 20 ounces. These are for people that really want to move some real wealth around.
Gotcha.
So
okay, so
that's
folks,
what that's about.
yeah. So if you Matthew, if you've got a chunk, you know, you're going to be buying bars and you're going to put, you know, several $100,000 of metal somewhere, contact Dana. His contact form is down below in the show notes, and he can get you pointed in the right direction. But great question.
Right.
Okay, so let's go on to the next question. This is from Ed in Charlotte, North Carolina. It says, I currently have a fair amount of silver coins and a few bars, mostly stored off-site and some stored in my gun safe at home. And he gives his address. No, he doesn't. That's a good thing. He recently began a monthly metal stream purchasing program at a place called Hard Asset Alliance and we know the folks at Chris Martinson and Adam Taggart were instrumental in getting that thing launched for $100 a month. So this is like kind of an incremental dollar cost averaging thing. It gets the allocation is 80% gold, 20% silver, and that forces him to constantly increase his precious metals. Okay, great. Like it so far. Which helps average the purchase price fluctuations, which is what we call dollar cost averaging. So I'm not going to spend time explaining. If you're not sure what that is, go to Investopedia, look up dollar cost averaging and explain to you what that is and why it can be a way to just work yourself into a position over time and not worry about the entry points. He says, I plan to increase the monthly amount contributed when my cash flow improves, but do you have any other suggestions to increase this part of my portfolio? I have one, but I'll let you go first.
Well, I don't know what to tell him about increasing that part of his portfolio other than, you know, throw more money at it if you have the available cash. This is a great way to go because you said dollar cost averaging. You know, you're in the market all the time, constantly accumulating in a market that over time continues to move higher. Now it goes up, it goes down, goes up again. So you're going to catch the dips, you're going to catch the tops sometimes, but dollar cost averaging is an excellent way to get a good value for your dollars in precious metals. It's also a forced savings plan to put you into precious metals. The only thing I would suggest is I do think silver is undervalued relative to gold, as we mentioned in our previous recording. And I would weight that more equitably towards silver, 50-50, maybe even 60-40 silver to gold if that option is available. Because I do think silver should be 35 or 40 bucks an ounce when gold is 17 and a quarter, which is where we're at right now.
Yeah, Ed, watch the video that we did in the Silver Series where we talked about the gold silver ratio. And, you know, when the gold silver ratio is over 80, you're going to be leaning a lot towards silver. When the gold silver ratio, in my book, and these are just my guidelines, are, you know, below 60, you're going to be leaning heavily towards gold. Anywhere in between, it's going to be kind of a sliding scale of a mix.
Right.
And then the other
silver, the lower the number towards silver.
No, the other way around.
Right. No,
The other way around. The other way around. Trust me.
The ratio is high. You want to
Yeah.
focus
When it hit 125, your phone was ringing.
Yeah. When the ratio is high, you go towards silver. When the ratio is low, you go towards
gold. That's right. But the ratio is how many silver ounces does it take to buy an ounce of gold? If it takes 100, then that means silver is cheap. Its purchasing power is weak. Which means you could, if you were, really trying to manipulate, you could, and there was no transactional friction, you would sell your gold and buy silver. And then when the ratio went down, you would sell your silver and buy gold. But I don't play that game. That's not what it's about. But let me answer the other part of this, because you're going to like this. It says, do you have any other suggestions to increase this part of your portfolio? Yes, I do. If you have a retirement account, a rollover retirement account, then you can open up a self-directed, a checkbook LLC. Our friend Damian Lupo does that. So we'll put information. You can learn about it. Send an email to EQRP. E as in Edward, QRP, or E as in enhanced QRP, like qualified retirement plan, at realestateguysradio.com. And you can get a free report from Damian about how all that works. But a lot of people don't realize that that portion of their portfolio that often is in paper assets or cash or mutual funds or bonds or insurance contracts or whatever can be moved over to precious metals that you can have in your physical possession in your safe.
Right.
Okay. So you eliminate counterparty risk. So that's number one. Number two is the precious equity strategy, which we're doing a whole series on. Maybe by the time this is out, it'll actually been released. But if not, you can get on the list when it comes out. PreciousEquity at realestateguysradio.com. I'm going to give you the nickel tour. You have equity in your real estate. You say, gosh, I'm concerned about the equity of my real estate, maybe a little bubble. And gosh, interest rates are super cheap. I go borrow a bunch of money out of my real estate at, say, 4%. And I get $200,000. I take $100,000 of it and I invest it in a note, a private note, a note fund, something yielding 8%. And we have lots of people in our provider network that can do that for you. Now you've taken half of the cash out proceeds out of 200,000. You've taken 100,000 and you've invested it at 8%, which makes you enough money to pay for the entire payment for the 200,000 at 4%. Okay, so you're break even on the cash flow. That's arbitrage. Now you've got $100,000 free and clear that you put into the QRP and then you put into the precious metals. Now you've moved your equity from your balance sheet from your real estate into your QRP, and you've sheltered it so that if you get capital appreciation based on a falling dollar, there's no tax. Okay, so we're going to do a whole series on this, explain to you how to extract equity depending on what kind of properties you have, explain the QRP, explain the tax benefits, explain where do you find the high yield. It's like a 15, 16 part series, but in a nutshell, that's the strategy. So Ed, I know you've been doing real estate for a while because I know you, and you're probably not thinking about turning your equity into precious metals, but that's something I would be thinking about right now. And that's why we're doing the series. Great question. Thank you, Ed. Okay, I got a couple more and then we're going to wrap this thing up. We got Robert from Huntsville, Alabama. And he says, how do you recommend storing gold in local bank safe deposit box, boo hiss, or in another country? Dana, what say you? And then I'll chime in.
Well, the safe deposit boxes have traditionally been the safest, most economical place to store your physical precious metals, but bank charters are being written so that they specifically disallow the holding of precious metals. You need to read the fine print. You want to have 24-hour access and you want to be able to sleep at night. And you can't have 24-hour access if you have the metals in a safe deposit box that a bank controls. Now, there are some private storage facilities around the country you can store your metals in, like a safe deposit box facility, only not run by a bank. We have a small list of those that I have available to you. You can get a home safe, and I have a safe company that I recommend out in California. In my old house, I had a rehab done on it, and I had them put a safe in the ground for me. And it was built under a cabinet. So you had to know that.
Now that you've moved, you can tell everybody where it was, right?
Yeah. Right. When I sold the house, I
just don't do the same thing in the new house.
Yeah. Well, I didn't do it yet. But when I sold the old house, I literally had to go there and show the new owners where it was. They had no idea. They're like, oh, this is a benefit we didn't know we were getting. Yeah. So you can do that as well. You can store in other countries, as I mentioned from one of the other questions, but really it's not worth it if it's a small amount. In dollar terms, because the costs overall will start to eat you up. So you have to have a larger dollar value, but that's particularly good if you have a large volume of silver that you want to store, which can be problematic for storing in any of these places.
Bulky. Yeah. So the banks of safe deposit box? No, never, boo hiss, would never do that. And the reason is not only just because they prohibit it, but even if they didn't prohibit it, it's subject to seizure. You know, if the IRS or a creditor shows up to your bank and says, hey, open the safe deposit box, give me everything in it, the bank will do it. And if they have a bank failure, there's all kinds of provisions in these bail-ins. I just would not trust anything of value in the possession of a bank, because the banks aren't our friends, in my opinion. So then I'm not opposed to having precious metals in your physical possession in your personal residence, as long as you've got a secured secret and you never tell anybody. But I wouldn't have it all there. The
Right.
foreign country thing, not a bad idea. We covered that in a previous question. If you're a bulk buyer and you feel like, you know, you maybe could have an issue, a jurisdiction issue in the United States, and you're kind of an international person, and you would have the ability to get out of the country, maybe with a second passport, and get to that country, then that could be a good idea. That's probably more of a high net worth individual strategy. Somewhere in between is what you mentioned, is a private storage. Private storage is they're going to be insured. They're going to be guaranteed. It's going to be completely allocated to you. You're going to put your metal in. You're going to get your metal out. There's no games being played. You can go inspect it anytime you want. There's different physical facilities, so you can be within driving distance or flying distance, depending on where you are. And so you can do a combination of things to diversify as you go along. And that way your stash, if you will, isn't all exposed in one particular place in case something goes sideways. But also another great question. And so if Dana, I know you have some resources, so I just made an audible. If you will send me that list, and then I'll make sure that we deliver it to people. Just folks who want that can send an email to PM, like Precious Metals Storage, at realestateguysradio.com. And then we'll send you a list of Dana's resources, and anytime he gets a new resource, we'll update you so that you'll always have a fresh list of options available to you. Okay.
Right,
PMStorage at realestateguysradio.com.
One disclaimer I do need to make. These are not facilities that I have vetted. I asked my insurance company to help me come up with a list so I could give it to my clients when they asked me, and now you asked also, Russ. So I haven't vetted these places myself. You need to do your own due diligence on them. But they are places, for the most part, that you can get your own insurance at reasonable rates. And if you need an insurance company, I can recommend one for you who specializes in this. Insurance companies like it when precious metals go someplace that's really safe and they don't move.
Yeah.
Because all they get is premium for very little risk.
Yeah.
So that's where the list came from. So just to clear up that these are not places that I specifically recommend and have vetted.
Yeah. Okay. Well, I mean, the main thing is they're established businesses, they're physical locations. You can check their online reputation. You can check their corporate charter. You can probably even get them to show you a copy of the insurance, because most of them are insured and they provide private security. You can tour the facility. It's not difficult to do the due diligence. No. And then when you send me that, also send me the insurance contact, and we'll include that. So if you send an email to PMStorage at realestateguysradio.com, we'll get you all that information. Okay. Last question, and we'll wrap this thing up. This is from Kevin in Manasquan. I'm not sure how to say it, New Jersey. He says, what is the role of platinum and palladium in a person's portfolio? Peter Piper picked a peck of platinum and palladium in a person's portfolio. Is there a ratio like gold to silver that can be used to determine a good time to buy or sell? And palladium is not something I'm familiar with. I see the prices are very high. I'm not sure why. Curious about your experience and opinions. Okay, so I don't have a lot to say on that, but I might. But let's see what Dana has to say.
Okay, well, there are 4 classic precious metals: gold, silver, platinum, and palladium. Excuse me. Platinum and palladium have much higher industrial uses than gold does in particular, and silver as well. In the current world that we live in, platinum is used primarily in diesel catalytic converters, and palladium is used in gasoline automobile catalytic converters. But palladium is also well suited for fuel cells, specifically hydrogen fuel cells. Now, if you look at how much silver there is in the world, there's 20 times the amount of silver as there is gold. That's why the historical ratio of gold to silver has been 20 to 1. Platinum is 2 or 3 times, if I remember, I'm trying to remember off the top of my head, scarcer than gold. So it should be priced higher than gold, but it isn't. It almost always has been until the VW diesel scandal reared its ugly head in the fall of 2015 or 14, which caused the platinum price to go to a discount to gold for the first time, extended time in my entire 40-year career now. So platinum, I think, is cheap relative to gold, but it is a speculation. Now, palladium is fully twice as scarce as platinum. And with the imbalance between mostly gasoline cars being made now and also fuel cells for electric cars, palladium is really in demand, and there's just not enough of it to go around. And that's why it's in the $2,300, $2,400, $2,500 price point, the highest price I've ever seen in my entire career. Well, platinum is half of that, and gold is in the middle. So I think the chances of palladium continuing to go higher are good. I do think platinum has broken out into a newer bull market. I wouldn't call it a full-blown bull market, but it's broken up above resistance recently, which is a good sign. But it's primarily used in these industrial applications, and they are much scarcer than gold and silver. So they are interesting metals as an added way to speculate in physical precious metals. But the primary go-to metals have always been gold and then silver.
Yeah, gold and silver are monetary metals.
Right.
And then gold, silver, platinum, palladium are precious metals. And then there's a whole range of collection metals that are either strategic metals or industrial metals. And so those are like all the different categories of metals. And so you have to ask yourself, what am I buying for?
Right.
If I'm buying for something that is potentially going to play the role of money in the future or be convertible to whatever the current form of money is, then I would tend to lean towards just gold and silver because they are the monetary metals. If you're looking at them as a trading vehicle with the goal to accumulate more dollars, the way if you were flipping a house, then maybe you're going to take a look at the demand, and you have to say, well, do I think the world belongs to Tesla and batteries, and that would be silver, or do I think the world belongs to fossil fuels and more catalytic converters, and then it would be something else, right? So again, you have to think about whenever you're trying to figure out what a price is, it's like, what is the commodity, what is the asset, and who is the next person in line that's going to trade me for something I will want for what I have. And that exchange often is facilitated through the currency of the day, but nobody is going to buy it just to own it. They're going to buy it because they want to use it for something, and it could be an industry. It could be to secure debt and be money. It could be for a strategic purpose, they have these very rare metals. That's not a game I play, but anyway, that's really all I have to say about that. I've looked at one time. I almost jumped in because I saw the big price dip in one of the two of them. I thought, I don't know what's going on, but that is way below anything I've ever seen it in. I'm almost tempted to buy, even though I don't know what the heck I'm doing. I wish I would have had that attitude then, and also with Bitcoin, because I still don't completely understand Bitcoin, but clearly people want it. They're putting a lot of money into it. So, gold and silver tend to be more stable, but boy, you can sure speculate pretty good with Bitcoin. So Dana, you're flashing your finger. You've got something more to say.
One more thing to add about platinum and palladium. Almost all of it is mined out of South Africa and Russia. And Russia controls a bigger portion of the palladium market, I think, and platinum market than South Africa does. So if they ever decide they don't want to export it, that will put upward price pressure on the metals. So,
okay, well, what we'll do is when we get Brian on, maybe he'll have something to say on this too, because he understands
more about that than I do.
He understands all that stuff. Okay, so anyway, ladies and gentlemen, great questions. Thank you so much. Dana and I have a lot of fun answering them. We're really looking forward to this. Keep the cards and letters coming. There's a form below to be able to do that. And depending, if you're watching this somewhere, there should be a form to see it. Send those emails to get all the stuff that we offered. Happy to help you out in that regard. Subscribe, watch, tell a friend, share, all that kind of stuff. So we really appreciate it. Dana, thank you so much for your time today. Great job. I always learn when I'm with you, my friend, and keep up the good work.
Thank you, Russ. It's wonderful to be with you too. And I'm really happy we get to do these things. It's a lot of fun for me. So thanks again.
All right. You take care. We'll see you next time. Before you go, 3 things. Number 1, subscribe. When you subscribe, you build up our subscription base, and that helps us reach more people. But even more important, it helps us attract great guests and subject matter experts to share their ideas and information with you. Number 2, click that notification bell to make sure that when we do post a new video on this hot topic, you're notified right away. And number 3, share. Please share this information with friends. Help them get on board this bus. Help them protect and preserve their wealth to take advantage of what's going on in the world today. All right. Thanks so much, and we'll see you in the next video.